What's good everyone, welcome back to another video on the YouTube channel, and as you can tell by the title, this video is going to cover how I got 450k in funding. As most of you know, lately I've been trading futures. I'm really enjoying trading NQ, and this was on a prop firm called My Funded Futures. So if you guys want to check them out, I'll leave a link in the description. So on the screen right now, I'll post all my past certificates that you guys can look at, and then I will go over how I passed the account. So I'll show you guys the risk management that I do use towards futures accounts. So the accounts I have 6 expert accounts, so the 6 funded 50k expert accounts, and I have one 150k account. So you can't have more than 3 funded accounts, so I've got all these in reserves. However, I've only traded 3, and on one of my 150k accounts I requested a payout last week and I got a 4k payout, so I'll post it on the screen right now for you guys as well. So I'm showing you all of this because I got 450k in funding just under a month, and I wanted to post it for transparency reasons. As I am making content for trading, I want to show you guys that I do actually make money and I can trade myself. So there's many educators out there that are great analysts and they have the great ability to teach, however they can't trade, and I'm the opposite. I can trade and I can teach about trading as well. So other than that, we'll get into the video. Okay, so if you guys have been following me for a while, you already know that I've gone over my risk management for CFDs. So that is just the Forex firms. I've got that posted on my Twitter page that you can check out. So this is going to be a risk management approach for just futures firms. So this is just the expert account. In my opinion, it's one of the best futures accounts out there right now. So you can only have 3 funded accounts. So that's the 3 funded accounts. And then you can only have a max drawdown of 3%. So as we have a max drawdown of 3%, as we have a max drawdown of only 3%, we need to be smart with the account we buy. So I would recommend buying the 50k. So bigger account does not always equal to more profit. So 50k accounts, that's what I would recommend. And then as our max drawdown is only 2k, this is where we will only risk $250. So you can lose 8 trades in a row before the account's gone. And realistically, if you're losing 8 trades in a row, then you need to concentrate on finding a new strategy or working on your psychology in trading. Okay, so as you'll risk $250 per trade, this is the consistent risk. So even if you go into drawdown, so say if you go into drawdown of 1k, you will still risk $250 and you'll still have 4 chances to recover the account. You want to move on to the funded stage as quick as possible, and you don't want to spend over a month just trading one evaluation where you make no money from. You'll risk $250 per trade on a 50k account, and those are the accounts that I would recommend for you guys to trade. And if you are trading on the 150k account, I would recommend to risk $500 per trade. So there is no max daily drawdown. There's only a max loss, so you can't lose more than 4.5k of this account. So risk $500 per trade, so you get 9 trades out of that. So once you get funded and you pass, you will get your live account credentials, and you will do the same. So if you get your account and you will risk $500, say you risk $500 and your account is now up $2,500 on the trade. As it's up $2,500, this is what you'll take, and this will be your buffer for the 150k account. So the buffer zone for a payout, you need to get it to 4,600 for a payout, and any profits above that are yours. So as you can see, this is where you'll slowly start to build it up. So you have 2,500 to play with, and then you'll risk $500 again, and you will aim for a similar trade that yields $2,500, and then you have a profit of $2,500 again. And then your profit of this is $400, as you need to make the buffer of 4,600. So if you watch the video up until here and you're finding some of the stuff confusing, I have made a flowchart on this to make it much easier for you guys to understand. So leave a comment down below, just put flowchart, and I will DM you guys the Google Drive that you can find the flowchart inside. However, the risk for the funded account and the challenge is the same. You're just trying to build the buffer zone. However, for the funded account, you're just trying to build the buffer zone. So 2,500 was just a round number that I said. Also, I'm saying this for the funded accounts because there is no consistency rules. So essentially you guys can trade them however you want, but I would recommend risking $500 per trade, so you have 9 trades on a 150k account. And then on a 50k account, you guys are risking $250 per trade. Okay, so now I've showed you guys the 450k in funding that I got, and I showed you guys how you should be approaching the risk management. Let's go over a strategy that you guys can use. Okay, so this is one of my models that I named Paradox. If you guys have not watched my bootcamp already, I would recommend you do so. It's my free course on my YouTube channel. However, this is my lunch model, so you guys will be focusing on the lunch range in the indices market. So a lot of people already have found a lot of success trading this model. So I wanted to go over that in a strategy because I did use it on my funded account. Essentially, all you're doing is waiting for the AM session to print. Then your focus is the lunch window. So the lunch window starts at 12 and it goes on till 1. And the price action between 12 to 1, we don't care about. As soon as price gets to 1 PM, this is where we will utilize the opening price. So say if price opens up like this and we trade up higher, this is where we'll see that price took out the lunch range high, and then we will look to target the lunch range low, and then we will go into AM session lows as well. So just to make this more simple, you guys are waiting for the AM session to print, and then you wait for 12 to 1 PM. And you wait for the liquidity to be built up, and then we just wait for price to either make an SMT for extra confirmation, so we can sell into a fair value gap and target the lunch lows and the AM lows as well. So this simple strategy can yield you a lot of profits, and I have multiple students around the world that are making money with this. If you go on my Twitter page, I do have retweets of all those people that are finding consistency using my model. So this was a bearish example. Let's go over a bullish example. So a bullish example will look like this, where we are trending downwards in the AM session, and then this is the 12 to 1 PM window. And price action here will consolidate. As we get into 1 PM, we look at the opening price, and if price dips below the 1 PM opening price, this is where we will look for buys, and we will target the lunch range high. And you can also target the AM highs that are resting right here. Key components to this model is 12 to 1 PM, the lunch range consolidation, and then we will look for the 1 PM opening price. This shows us that price action is overbought or oversold, and as you can see, we trade below the 1 PM opening price. This shows that price is oversold and it's good for buys. And these are our targets areas. And now I'm going to go over an example with you guys. If you want to see any more examples, just head over to my bootcamp on my YouTube channel. It's under playlist, and then you will find the full video in depth as well. Okay, so here I have an example of Paradox. So you guys can see that the AM session was trending upwards, and then from 12 to 1, this is where we focus on price just to build up liquidity. As we build up liquidity right here, we look at the 1 PM opening price, which was right here. And we want to see price trade above and take out the lunch highs, and we are above 1 PM open. So you guys can see that we took out the buy side liquidity at lunch, and then we have the lunch lows right here. Once I see this and we are above 1 PM open, I will move on to the 1 minute chart and look to enter. Okay, so as you guys can see that this is the 1 PM opening price, and here we take out the buy side liquidity. We have sell side below this low, and now we just will look for an entry for price to trade back into, and we will sell. So we have this fair value gap right here. So we'll just wait for price to retrace into there, and our stop loss will go above this high, and we will target the sell side liquidity, which is right here. So as you guys can see that we took out the lunch lows. So this was a straight run on the sell side. However, let's see if we get tagged in again. So as you can see, price action just trades without us and it runs into the sell side liquidity. So if you did keep your sell limit, this is where we get tagged in and price runs lower again. However, this is the concept of my model. So as soon as we run the lunch highs, we will target the lunch lows, and you guys can see if we have an entry right here, such as these fair value gaps, and this is where we'll sell from, and we'll target the lunch lows. Vice versa, the same thing is done when we are bullish. If we take out the lunch lows, you will target the lunch highs. Hope you guys found this video useful. If you have any questions regarding this, leave a comment down below and I'll get back to you. As always, thanks for watching.